The more hits we play, the more hits we get. URLradio.net. Stacey Sturm. Another Financial Friday with our friends at Legacy Financial Partners. And in with me today, I have Tyler Richter. How's it going today, Tyler?
I'm doing well. How are you, Stacey?
Good. So today we're talking about tax and estate planning, Roth conversion, all this stuff. I have no clue what you're talking about.
Yep.
Did you see me glaze over when you said, yeah, this is what we're going to be talking about today? And I'm like, okay.
Well, that's what I'm here for. I'll hopefully simplify this for you.
So tax estate planning, let's start with that.
Yeah, so, really broad topics, but as far as my experience goes in the industry, these are some of those areas that I've noticed that my clients or prospects haven't been getting serviced with previous advisors or, different firms in town. So, really the way that I function and run my practice is it's surrounded, 6 areas of financial planning.
Okay.
And where I see a lot of people getting help with is investment management, right? That's, people think financial advisor, they're here to invest my money kind of thing.
Yeah.
But that is not the scope of everything that should be involved in this. And tax and estate planning is a huge part of that. So
tax planning, what all does that entail?
So there's a lot that goes into it. One of the things that our company does too is we run mock tax returns. There's a reason for that. We cannot submit tax returns for you. This is just a way for us to discover different strategies that may, whether it's lowering your tax bill or down the road, making sure that this gets passed on to your heirs or wherever you would like this money to go in the most efficient way. So yeah, that's been, my take with it. And, the way I look at it is, do you want the IRS or your family to be the biggest beneficiary of your assets, right?
Yeah, that's true.
Yep. So that's, that's kind of my job. I go in there and make sure that this is all, whether it's titled the right way or if there are certain strategies. One of those would be Roth conversions. That's, when we had the big market drop for coronavirus, that was one that we were really pushing out to our clients, with markets at, these levels right now, let's convert this over to Roth and then let it grow. And then when you take that out, it's tax free. So
I think a lot of people still really don't know what Roth IRAs are. They still don't know how they work or what they are.
Yep. So a Roth IRA, that is money where you paid taxes on already. So you got your paycheck, right? Yep. Paid taxes on that. You put it into this account. And it grows, hopefully grows, right, if you have the right advisor.
It's supposed to go that way, yeah.
So hopefully we're growing that account. And then at retirement, so 59 and a half is when you can withdraw that money and you wouldn't pay taxes on it. So I think another one of the questions that, I always ask my clients is, no one knows, no one has the crystal ball, right? But if you were to say in 20, 30, 40 years, do you think tax rates are going to be higher or lower?
I'm going to guess they're probably going to be higher.
Probably, right? Who knows?
Based on history.
Yep. Who knows how much? And, we've obviously, with coronavirus and all that, giving out a lot of money. And that money needs to get paid back. So what's, probably the easiest way to get that revenue for the government? It's raising taxes, right?
Taxes,
Yep, exactly. So addressing those concerns with clients and, going through and really doing the math on it. I think that's kind of the big part where there's a lot of behind the scenes that goes on with this with our financial planning department. They run a lot of this for us, but, showing them, okay, so if we start this strategy now and no one knows, when they're going to die or, anything like that, but, we can show different ages on there and say, okay, so when this does happen, if we use this strategy, now this will be passed on to your heirs or, your charities, whoever you want it to be. But that part won't be taxed now. So it's, really digging into the math, and it's something like that. I mean, that can save thousands and thousands of dollars for clients. So.
Well, yeah, even if you just look at now with Roths, can you pull it out early, but then you get hit?
So you get hit on a portion of it. Yeah. So there are parts where your contribution, you can take that out. There's different qualifications. So you definitely want to talk to an advisor or, a tax advisor, anything like that. Just to make sure, because yes, those tax penalties can add up really fast. So.
But the earlier you start, the longer you have to start making money on it.
Yep. Well, exactly. I mean, that is one of the basic kind of premises of Roth IRAs. For younger people, they have a lot more time, right? So if you are able to take that tax hit up front and putting it in there, I mean, that, I do this for a lot of my close family, right? I have a lot of little cousins and whatnot. And this is, one thing I relate to their parents is, hey, if we do this now, look what this small amount that we put away now will be when they are 59 and a half.
Yeah.
So.
Yeah, it's crazy. Yep. And I do see more and more younger people are being smart and starting early while they have a little bit of that expendable income.
Well,
before the kids
you just think of like technology too, right?
Yeah.
I mean, anyone can go on Google and, search some of these different areas and, that learning, it's one click away.
Right.
So if they can access that, it's, good for them because that's a huge head start.
Yeah. Anything else you want to talk about with this?
Maybe a couple different examples.
Okay.
So I'll, with some of the recent law changes, one of the big ones was that they changed the rules on inherited IRAs. So, and I'll just use an example of, let's just say your parents, right? Someone's parents. Mm-hmm. So let's just say they have a substantial amount in IRA dollars. So let's just say it's $1 million.
Okay.
And if they were to,
that.
Right? Yep. But
Go mom and dad.
Yeah, exactly. So they had a good financial advisor. But the way it works is, so when someone inherits those, if it's a non-spouse now, so, daughter, son, grandchild, friend, anything like that, they have to have that account drained to zero within 10 years. And if you don't, there's a huge tax penalty on the amount that you didn't take out.
Wow.
So you think of, I'll give an example of, I had a client pass away about a year ago. And, we had started talking about this prior to, him getting sick.
Yeah.
And, he had stuff that was going to his wife, right? And then to his kids, grandkids. And we moved around the beneficiaries so that his wife was able to get more of the IRA dollars because then that rule doesn't apply. And you look at, his kids they're successful. They have great careers. They're making good money. So then you throw on, a couple $100,000 that they have to take out and claim as income. I mean, their tax rate jumps up a bunch, right? Yeah. So just having those discussions with people, it can save a lot of dollars and make sure that they are the primary beneficiary and not the IRS. So, one other quick example is I work with quite a few nurses in town, and one of the things with nurses is, they like to go to school past the 4-year degree, and, whether it's an NP, nurse anesthetist, all those different areas, right? So they're working and they accumulate their 401k.
Yep.
Then they leave, they go to school for, 2-4 years, whatever that is after. So they don't have any income during those years, but they have a 401k over here. So you can convert that to Roth while you're at a 0% bracket, essentially. So you take the hit while you're in college, and then that gets to grow because when they get out, usually they're making pretty good money as a NP or, any other title like that. So just two kind of common examples that I've seen and worked with. So
if people want to get a hold of you, Tyler, how can they find out more information?
Yeah, so our phone number is 701-258-9735, and then our office is located at 505 East Main Avenue.
505 East Main.
Yep.
And do you have an email?
Yep. So it's tyler.richter, and that's RICHTER @ampf.com.
Tyler.richter@ampf.com.
Yep.
Or 258-9735 and just ask for Tyler Richter.
Yep.
All right. What are you going to be talking about next time you're on, Tyler?
Yeah, so next time, tax and estate planning is a very broad topic.
Yeah.
So, there's a lot of areas that you can really drill down into, and they're very important topics. So, next time I'm going to be looking at some different estate planning as far as trusts, wills, beneficiary designations, and if anyone out there listening has a topic they'd like to, learn more about, feel free to message us or give me a call, and, we can definitely squeeze that in there as well.
All right. Thanks, Tyler.
Thank you.
And you've been listening to Financial Friday on urlradio.net.